If you don't want to ride the roller coaster of Wall Street, you need to learn how to read those charts, guys, because all that happened is we fell from the lofty heights of a bull trap down to historic support, and with no catalyst to drive us further, regardless of all of the FUD on Wall Street, with no catalyst to cause us to break through that historic support, we bounced. This is why I alerted SPY calls this morning. I'm traveling. I'm at the Bitcoin conference right now, getting queued up to hear Michael Saylor, Cathie Woods, Donald Trump, RFK speak this week to get their insights on crypto and Bitcoin. We're in an election year. We had to expect some digestion from the move up that we've enjoyed over the last year and a half. Okay, and the question that we've got to answer is, where are we going and what is going on with these markets? Is it time to cash out or to buy up? Guys, I'm going to tell you this. I've been talking about it. We are in the great rotation that's being led by the Fed. Okay, because he is going to give us interest rate cuts this year, we're going to finally get some breadth to this bull market, which is that only the Magnificent Seven have been doing the heavy lifting. I've talked about it many times before that NVIDIA, all by itself some days, were causing the market to climb. Eventually, we got that participation from Apple late in the game, and all of the big tech companies were pumping these markets to new highs. Now, with the coming of a potential rate cut, we're going to get something called market breadth, market participation. Easing monetary policy will push money into small caps, causing them to catch up to big tech and even to perform better than big tech. This is going to be referred to as the Great Rotation of 2024. Having said that, you don't want to get too bearish on big tech because the market doesn't just go in one direction. There is always an exchange. And that's why we literally buy stocks, bonds, and crypto on things called exchanges. Because there's a constant exchange. It's sort of the yin and yang of the market, from the bulls to the bears. We simply got a moment where the bears were in charge, but now it's leveled off and the bulls are back. Now, I'm going to take you into a couple key charts to illustrate this and to show you what we got and what we're going to be looking for next. Where should we take caution again? And I'm going to introduce you to a hot stock that you should be trading because it had what's referred to as relative strength. And you say, okay, Josh, what's relative strength? Relative strength is when you compare it against its peers and it's doing well when everybody else is doing badly. Now, yesterday's ugly red candles that were seen across the board, it also, this stock I'm going to introduce to you here in a minute, it also got an ugly red candle, but before the day closed, it went green before everything else that we're getting green today. It went green before close yesterday. And so that tells us a lot about the way Wall Street's looking at it. And I'm going to get into that play here in just a minute. And we're going to talk about the SQQQ. Guys, for 2 years, people asked me, is it time to buy the SQQQ? Is it time? Is it time? Is it time? And I constantly said, no, don't touch it with a 10-foot pole. Leave that thing alone. It's going to get beat down more. When it was $7.40, I said, guys, it's time to buy it. And then after that, it dipped a little bit. And at $7.20, I said, guys, I'm buying a little bit more. Now, there was the risk that it could go to $6 because at that point, the markets were just extremely exuberantly bullish. But I said, yeah, this is a good place to take risk. Well, we got all the way to $9 on that move, 30% pump since I made those predictions. And I alerted this morning, right before I alerted the SPY calls over in the Stocks with Josh Discord, I alerted I'm raising my stop loss on the SQQQ. And sure enough, I got kicked out of my position in high profit on the SQQQ. And in the course of the morning, the SPY calls took off like rockets. While I was having breakfast with Larry this morning, I was adding to my position, and it's been climbing, climbing, climbing. And then just a moment ago, I took some profits, and I'll show you guys why, because it's all about those trend lines. And more specifically, what type of candle do you get at the trend line? That's what we watch. You got to learn to snap your lines. And then when your price action gets to your trend lines, it's not automatic buy, automatic sell. It's patience. Let's see what kind of candle forms at the trend line, and that'll tell us whether or not our trend lines are going to get respected, whether we're going to get a reversal, or whether they're going to get broken. I'm going to show you a couple important stocks here today. We've got to talk about Tesla because I made a prediction on that on earnings day, and I think that the call was yet again 100% accurate. And I want you guys to see what I see in the chart so that you guys can become the chart goat masters of your own Wall Street journey. So this is the Stocks with Josh show. Thank you for the likes. Hit the subscribe if you need help trading these choppy markets. And let me just tell you, they're going to get choppier. Why? Because the market went up for a year and a half, even longer. There's an expected 10% correction. Even in a bull market, I said just the other day, at bare minimum, we're going to end up getting a 6 to 10% correction. We're going to go into choppy waters. I told everybody 4 to 6 weeks after we made our market high, expect 4 to 6 weeks of choppy markets. I said that we could go down 2%, 3%, go right back up 2%, 3%, come back down. It's going to be the most important time to be watching those strategic trend lines. It's going to stay choppy. And because of that, if you need help trading those choppy markets, then you need to hit that subscribe so you can keep getting these videos. Okay, let's go into some important charts so I can let you know what I'm watching for in the days ahead. First off, you can see Magnificent 7. We got a couple green ones. Amazon doing good. Tesla having the best day out of all of them. But really, the Magnificent 7 are not doing great. Amazon just up 1%. Apple up 0.5%. Microsoft and Meta are red for the day. Google is gray. And that's why I said this was going to be the great rotation led by the Fed in 2024. The only one that's really crushing it right now is Tesla, up 4%, but you also have to take in consideration how hard it fell. Guys, let's just look at my trend lines for a minute. So I had mentioned that we had a giant cup formed with the neckline being here at 253 and that we were going to possibly shape the handle. And I said that the trend line that we wanted to watch was 222. We needed to see how it respected that. We did dip beneath it, but we are now right back above it. So here's what you guys need to understand regarding Tesla moving forward. I'm not expecting rocket ships up right now. I'm expecting what a traditional handle to a cup looks like, which is something like this. I'm going to be watching 214 because that's our local pivot. We pivoted at 214, but largely I'm expecting it to chop up between 214 and 222. Now, another scenario that we could be watching for would be for it to come all the way back to 233. That would be pretty bullish. But right now, what I'm largely expecting is for us to consolidate and stay above 214. That's what I'd like to see it do right now. We could dip as low as 211, 212. I've told everybody that that's a key level of support. But at the moment, what I'm looking for is the image that you have on your chart. Now, I want to warn everybody, I'm looking at the daily time frame, and I want to give you guys some basics of the MACD. Right now, these bad boys over here, the MACD is pointing down, which means that we are still in risk. However, we are above the zero line of the histogram, which means the bulls still have control of Tesla. We're only 2 months away from the big robo-taxi event, and if Wall Street pumped the stock nearly 100% on the news of robo-taxi, I don't believe they're going to abandon it 2 months away from that event, which means that if we consolidate, guys, in this zone right here between 214 and 222, it means the closer we get to that event, the more likely that we're going to be to push back up to 265. Now, you have to have a risk strategy of your own. You've got to be able to take precautions. You got to know where it is. You need to draw the line for yourself. The way that a traditional trader would look at it is if it holds an area of support, they'd put their stop loss beneath that area to prevent taking a bigger hit to the downside. This is not a suggestion for you to buy, sell, or hold. You've got to manage your own risk. I'm letting you know what I'm watching for. All right, then I want to give you this little tidbit about the MACD and what we're watching for in a bullish trend. Like I said, we're in a bullish trend on the MACD. When this MACD line, the blue line, crosses back above the signal line, right here is going to be your biggest buy signal, okay, because that's going to signal the opportunity for us getting all the way back to 265 and 300. That's just something for you to watch for in the chart. Okay, let's take a minute and look at the SPY. Guys, if you recall, I warned everybody that we had a bearish head and shoulders pattern forming here. I told everybody right here on this day, I said, guys, we've moved up enough for us to break down right now. And whoa, did we break down. I gave everybody this neckline right here. that this is the area that we needed to watch, which was right around this 549.60. We broke it. We got this big move down. But I also gave everybody this support of 540, right? So we've clearly bounced on 540. Now let's just make it very simple, guys. The levels that we need to watch is we need to stay above 542.80 for the rest of this week. If we do, then we can eventually, potentially come back as high as 549.60. Why would that be the level we would come back to? Well, we would be back testing this line, this historic line, which is clearly an area of support. This was the neckline of our head and shoulders pattern, and this would be the area that we would have to come back to, get rejected at, to see if these markets want to go lower. If we didn't get rejected and we got above this line, then this would be super bullish, because it could mean that we would go back and make a double top on the markets. We'd have to kind of wait until we get a little further down the road to figure that out. All right, I'm going to take time to show you guys one more stock that you need to be putting on your radar besides IWM, which is small cap Russell, because that's where the great rotation is going to be moving towards. I'm going to give you one more stock that I think is worth watching right now, the one that showed great relative strength and where our support and resistance lines are on that. Okay, guys, we're looking at the ServiceNow chart. The ticker is NOW, and we're on the weekly time frame, showing you that in the midst of this terrible week for most of big tech, as well as a lot of companies, it was not a bad week for ServiceNow, ticker NOW. This green candle shooting all the way, breaking out over the last 24 hours. Even yesterday when the candle had gone red, it finished the day green, and as we've shot all the way to my high target of 840, and you can see that's operating as resistance. Now some of you might say, well, Josh, the move's over. I mean, it's been booked. This thing moved quick and I missed it. I'm just going to tell you, no. ServiceNow is in a strong upswing, and this large green candle, yes, we will see some pullback on it, but largely I would say that this is one that is winning and is going to continue to win. The market's not going to give you a candle like this and then immediately sell off. Now, having said that, we have the potential for a breakout move above 840, and here's what you guys need to understand about that. Here's what I'm going to be watching. What do we have above 840? We've got no resistance. There's no resistance up here. There's no sellers, only buyers piling in, okay? But the big picture view that I want you guys to watch for, opportunity for a head and shoulders pattern. Right now, we are making the head. Now, we can talk about where the neckline should be. Let's just use the neckline right around this 675 level. But here's how I see it. We've got our first shoulder here. We're in the middle of making our head. Now, we don't know where that's going to go, but at the moment, the thing is moving bullish. So even if it were just to stop here and not break above 840, that's already completed ahead. Now here, where I'm going to be liking it is a move back to around 700 for the completion of the right shoulder, which would be possibly all the way back up to 840. Now these patterns are actually usually bearish, because what they'll eventually do is they'll eventually break down at the neckline, and they will back test the neckline and could go lower if the stock has come to the end of its run. Now, I have no reason to believe it, because back in the day when we were watching NVIDIA, we also had a head and shoulders pattern that basically ended up being a range-bound trade where it did do a fake out, and then it took off to all-time high. ServiceNow is one to watch. Right now, if we move back above 840, there's no resistance, and it can really go much higher. We can get easily to 880 and have a $40 move in a single day. Now, this is not a buy and hold strategy right now. Once we get a break back beneath this yellow line at 840, that's when we need to take caution, possibly ride some puts all the way back to the neckline at around 700. Now, you guys might say, Josh, I'm not following that. Well, you don't have to follow it. I'm introducing it to you here. I'm going to be giving trade alerts and updates for calls and puts on now, NOW, in the Stocks with Josh ChartGoat University Discord. Guys, I'm traveling, and so I'm not going to be as active this week, but I will be trying to give some trades, and I'm going to be giving some alerts throughout the week. But now is going to come on the radar, and it's going to be put up a little higher because there's opportunity there. I just gave you the trade plan. Moves above 840 have a lot of potential up because there's no resistance. but moves back beneath 840 could be the conclusion of forming our head, and we could get a great move back all the way to our neckline around 700, which is a $140 move up. So I know it takes a little bit of experience, but you could just follow along and learn while I give you guys the trade alerts on now, and see how it turns out for us. There's going to be money to be made in this particular stock, but the market, that's want to leave you guys with this today. There's always money to be made on the market. So don't get married to a story. Don't get married to a stock. Don't get married to a bullish position or a bearish position, because just like today, the markets hit support and now they went bullish, right? And so we're going to be range bound. You know, I don't really see us getting to 580 on the SPY this year. Seems like we've taken a strong position at 560. That's where the sellers came in, but it wouldn't shock me if we got back to 560 and tested it, because there's no catalyst causing the markets to go down. I said that in a video I've made in the last week, and I'm saying it again today. Tell me in the comments what the big catalyst is going to be when a lot of Wall Street simply is rotating to have more breadth in an overall bullish year, in an overall bullish environment that people are now calling a Goldilocks environment, because the Fed has potentially tamed inflation. The market's still got the catalyst of AI and innovation, and we can continue to cook higher, guys. But you got to be prepared for these downturns and these FUD moves, because as I've said many times, the market takes the stairs up and it likes to take the elevator down. We saw that, but that's when you want to get back on and take it back up. All right, guys, hope this helped today. Hit that like and that subscribe to get the next commentary on these markets and the next hot play. Appreciate each and every one of you. Peace and blessings. We'll talk to you soon.